Hey everyone, and welcome to this explainer. Today we're taking a really comprehensive employment standards manual and distilling it into a focused high-energy training session built specifically for payroll managers and administrators. If you handle compensation, you know firsthand that navigating the tangled web of employment standards is, well, it's basically like solving a giant puzzle where the rules keep shifting. We're going to cut through the legal jargon and focus strictly on what you need to know to maintain absolute compliance and sidestep the most common, costly payroll pitfalls out there.
So, are you making costly payroll errors? It's a high-stakes question, I know, but in the payroll world, the devil is literally in the details. Even a seemingly tiny miscalculation, or kind of just slightly misinterpreting a standard, can snowball into major compliance violations, really unhappy employees, and huge financial penalties for your organization. Close enough just doesn't cut it here. You basically have to be right 100% of the time. Okay, let's dive into this. Here is the roadmap we'll use today to tackle these issues. We'll start by navigating federal versus provincial rules, then look at avoiding common overtime pitfalls, dig into overtime banking and exemptions, figure out how to prevent costly record-keeping mistakes, and wrap up with a mandatory record retention checklist. All right, let's kick things off with Section 1, navigating federal versus provincial rules. This is where a lot of misclassifications happen. Let's bring this abstract law down to earth for a second. Meet Alice and Sally. Both of them work right there in British Columbia. Now, Alice is a loans officer at a central bank. Because banking is federally regulated, her employment falls straight under the Canada Labor Code. Sally, on the other hand, works for a privately owned food wholesaler. By default, businesses that aren't explicitly federal fall under provincial jurisdiction, meaning Sally is covered by BC's provincial employment standards. So the big takeaway here, geographic location doesn't automatically dictate your rules. The actual nature of the industry does.
Now, what's really interesting about this slide is how things can get super complicated within a single organization. You could literally have one company split across two completely different jurisdictions. Think about a cable company, right? Their installation division might fall strictly under federal rules, while their retail storefront down the street is governed by provincial standards. You simply cannot apply a blanket payroll policy across the whole shebang if your divisions cross those jurisdictional lines.
Moving right along to Section 2, avoiding common overtime pitfalls. When folks are asked to work beyond their maximum hours, things get tricky.
Before we even touch a calculator to do the math on overtime, you absolutely must understand the strict legal parameters of a day and a week. Let's use Alberta's strict definitions as our benchmark here. A workday isn't just the hours the sun is up or when a shift happens. It's legally defined as a specific 24-hour period ending at midnight unless the employer has established a different, consistent practice. Similarly, a week is strictly midnight Saturday to midnight Saturday, or another rock-solid 7-day block. If your payroll software is tracking a different window than the legal definition, well, your entire overtime calculation is going to be totally flawed.
Now for the golden rule. 1.5 times the regular wage rate. Across most jurisdictions, this is the absolute standard multiplier you must pay out the second an employee crosses that legal threshold for maximum hours. And this brilliantly illustrates why you can't just memorize that 1.5 multiplier and call it a day. Look at how jumping across provincial lines completely rewrites the math. In Alberta, overtime triggers after 8 hours in a day or 44 hours in a week, whichever is greater. But hop over to British Columbia, and standard overtime kicks in at just 40 hours a week. Not only that, BC hits you with a double time rule. Any hours worked over 12 in a single day must be paid at 2 times the regular rate. If you mistakenly apply Alberta's 44-hour rule to a BC worker, you're looking at a massive compliance violation.
Okay, let's look at Section 3, overtime banking and exemptions, because sometimes you can actually bypass standard payouts legally. First up, exemptions. Who doesn't get overtime? Generally speaking, managers, supervisors, and employees working in a highly confidential capacity are excluded from overtime provisions. But listen, here is a huge warning for all of us in payroll. Do not fall into the trap of misclassifying a standard worker into one of these exempt roles just to dodge overtime pay. Auditors aren't easily fooled. They look strictly at the day-to-day duties an employee actually performs, not just the fancy title on their email signature.
Now, if an employee isn't exempt, they might actually prefer getting paid time off instead of the cash. Let's walk through the exact procedure for banking overtime, using Alberta as an example. Step 1 is absolutely non-negotiable. You have to create a written agreement between the employer and employee. Skip the paperwork, the whole arrangement is invalid. Step 2, you bank the hours at a 1-for-1 rate. 1 overtime hour worked equals 1 hour banked. And finally, Step 3, those banked hours must be used up within 6 months. As you can imagine, this requires some really precise tracking on your end.
Which brings us nicely to Section 4, preventing costly record-keeping mistakes. This is where systemic errors happen.
Having robust record-keeping isn't just a nice-to-have best practice, it is literally your main shield against compliance violations. You've got to keep complete, to-the-minute records of all hours worked. Here's a classic example. If an employee is traveling for work and they are under the control of the employer during that trip, that usually counts as time worked. It has to be recorded and paid out accordingly.
So, are you falling into any of these severe traps? Let's check. First, overpayments. If you accidentally overpay someone, you can't just quietly deduct it from their next paycheck to make up the difference. There are incredibly strict legislative rules on how you recover that money. Second, if you have employees working purely on commission, their earnings can never ever drop below the statutory minimum wage for the hours they put in. And third, job-protected leaves. Every jurisdiction provides leaves for life events. Failing to track who is eligible and granting these properly is a wildly expensive mistake.
Let's move to our final section and see how this builds right into our ultimate compliance tool, the Mandatory Record Retention Checklist. So, the crucial point is 6 years. Generally speaking, holding on to all your records for 6 solid years is the gold standard. It's directly mandated by the Federal Income Tax Act, so the CRA, and the Taxation Act via Revenue Quebec when we're talking about year-end slips. You should definitely double-check your specific provincial rules since some checklists vary, but 6 years is always your safest starting point.
You also have to make sure that the physical or digital thing you hand the employee holds up to an auditor's scrutiny. Under federal rules, your pay stub absolutely must have these items: the specific dates of the pay period, the total hours worked, the exact rate of pay, fully itemized deductions, and of course, the net pay. Missing even one of these basic columns, that's an instant compliance failure right there.
Finally, let's talk about the modern nuances of record keeping. Going paperless and providing electronic pay statements is totally fine, but only if you maintain strict confidentiality, ensure the files are easily printable, and keep them accessible to the employee for at least 3 years. Oh, and don't forget the employment statement. Under federal rules, you've got to hand new hires a written statement outlining all the details of their employment terms within their first 30 days on the job.
So here's the ultimate provocative question I want to leave you with. If a government auditor walked right into your office right now, today, are your records truly bulletproof? Take a hard, honest look at your internal processes. Are your jurisdictional classifications spot on? Are your overtime rules legally sound? Are you retaining everything for that magic 6 years? Thank you so much for joining me for this explainer today. I highly encourage you to take these insights, go back to your desk, and audit your own systems right away. You've got this. Now go keep those records bulletproof.